Have you ever wondered how to invest in utility stocks? Well, you're not alone. These are shares representing ownership in companies that provide essential services we often take for granted: electricity, natural gas, water, and sanitation. They operate in a regulated environment, often under monopolistic or oligopolistic markets, which means steady demand for their services. Imagine owning a piece of that. Intriguing, isn't it? So, are you ready to explore the world of utility stocks? Let's dive in. Investing in utility stocks can be done in various ways. Like a buffet, you have a smorgasbord of options to choose from, each offering a different flavor and experience. First up, we have direct stock purchases. This means buying shares of individual utility companies through a brokerage account, much like picking up a single dish from the buffet. Then, we have the all-you-can-eat option, otherwise known as exchange-traded funds or ETFs. These are funds that track the performance of utility sector indices or specific segments within the sector. With ETFs, you're getting exposure to multiple companies through a single investment. It's like having a plate filled with different types of dishes all at once. Next, we have mutual funds, the chef's special, if you will. Mutual funds focused on utility stocks pool investors' money to invest in a diversified portfolio of utility-related securities. This is a professionally managed selection of dishes offering the benefits of diversification. Now, where can you find these enticing options? Utility stocks are listed on major stock exchanges such as the New York Stock Exchange or the Nasdaq. You'll find them in industries such as electric utilities, natural gas utilities, water utilities, and integrated utilities. So, now that you know where and how to invest, let's look at why people choose utility stocks. It's like understanding why some dishes are more popular than others at the buffet. Stay tuned! Why do people invest in utility stocks, you ask? Well, the answers are as practical as the services these companies provide. First up, utility stocks often offer steady dividend income. It's like having a reliable old friend who always shows up when they say they will. This makes them a hot ticket for income-oriented investors looking for a dependable cash flow. Secondly, utility stocks have a defensive nature. These companies are like the unsung heroes that keep the lights on and water running no matter what's happening in the economy. This resilience to economic downturns gives them a stability that's quite appealing to investors, especially during uncertain times. Lastly, the regulated environment in which these companies operate reduces business risks. Imagine playing a game where the rules are clear and consistent. That's what investing in utility stocks can feel like. But like all investments, utility stocks have their pros and cons. Let's talk about the pros and cons of investing in utility stocks. Now, utility stocks are like that reliable old friend who may not be the life of the party, but you can always count on them. They are known for their steady income, often providing consistent dividends. That's like getting a little thank you note with cash inside, just for being an investor. Furthermore, utility stocks are defensive in nature. They're less sensitive to economic cycles, offering a layer of stability during market downturns. Think of them as a sturdy ship in a stormy market sea. They're also regulated, which means there's oversight that provides stability and reduces business risks. It's like having a diligent chaperone at that wild stock market party. But every coin has two sides, and utility stocks are no exception. They may offer slower growth compared to other sectors. So if you're looking for the stock market equivalent of a rocket ship, utility stocks might not be it. Their high debt levels can also make them sensitive to rising interest rates. And let's not forget regulatory risks. Changes in regulations can affect utility operations and profitability, adding a dash of unpredictability to the mix. Even investment gurus like Warren Buffett have shown interest in utility stocks because of their defensive nature and steady income streams. But as always, it's important to do your own research and consider multiple perspectives. So, are utility stocks the right investment for you? Only you can make that decision. Today, we've navigated the world of utility stocks together. We've discovered how to invest, whether through direct stock purchases, ETFs, or mutual funds. We've explored why some investors are drawn to the steady income, defensive nature, and regulated environment of these stocks. But we've also acknowledged the potential pitfalls, such as limited growth, interest rate sensitivity, and regulatory risks. As with all investments, thorough research and consideration of your financial goals and risk tolerance are crucial. Remember, the right investment depends on your financial goals and risk tolerance. Leverage on bullbearvector.com to find the right stocks and options to invest, helping you to save time and reduce costly mistakes today. Happy investing!